Happy Monday, everybody, and welcome back to our show. I'm your co-host, Stephen Norris with Kelly Williams. As always, my co-host, Michael Dodd, Megastar Financial. Michael, how you doing on this
I'm
particular
doing great, Stephen. How
Tuesday
about you?
morning?
Did
It's a
you do
little
something
chilly this
exciting this
morning.
weekend?
Oh, yeah, we had a lot of fun this weekend, and, got back to Colorado. It's a little bit chillier than I thought it was going to be. So I'm actually wearing a long sleeve t-shirt today for once in the summer. So, it's crazy stuff are happening.
I love it, man. Where'd you go?
Went to Nevada teaching some classes out there. So we had a good old time, got to hang out. 109 when we got out there. So it was absolutely ridiculous. And it did not cool off for a minute while we were there. Yeah.
It's hot. That's hot.
Yeah. But anyways, guys and gals, today we are talking about one of the topics that have been surrounding the real estate ether for the last couple of weeks here, and that is going to be refinances. What to know, what to be aware of, and currently what has Fannie and Freddie Mac been talking about those types of things. So that, being said, Michael, kind of give us some updates on that front.
Well, you know what? I got some good news. And as far as that go, a couple of weeks ago, Fannie Mae and Freddie Mac, being the capitalists that they are, decided to go ahead because, interest rates are so low at this time and we're almost at historic lows. Decided to go ahead and put a loan level pricing adjustment in there, which stands for LLPA of 0.5%. So they wanted to make basically an extra 0.5% on every loan to go ahead and pass that along to the consumer. The crazy part about that, Stephen, was that they didn't give anybody in the industry any time to set that up. They had people, we had consumers already locked in and ready to close, and they said, come September 1st, we're going to charge either the bank or the lender that, or you can pass that along to the consumer. Of course, the mortgage industry, we shouted and stomped and screamed. And now they've gone ahead and just came out the very end of last week and said, you know what, we're going to remove that loan level pricing adjustment. I guess maybe we should wait. So they're going to go ahead and start that again December 1st, 2020. So just saying that, this is an extra opportunity for everybody out there listening to either, contact their lender or myself to know that right now interest rates are super, super low, and they won't have this extra fee that's going to be passed on to them come December 1st, because, that'll be built into the loan or the interest rate, but the consumer will still have a good chunk of that. That's going to be something that's going to affect what their interest rate is.
Yeah, and that's a big thing too. So to clarify what Michael was talking about when it comes to refinances, we are not talking about adding any extra points or percentages at all whatsoever for new home buyers. If you're getting a new loan out there, first time buying and looking for your third, fourth, 10th house out there, that is different than if you're looking for a refinance. There has been no changes across the board when it comes to the new loans. So with that being said, if you're looking to get a new house out there, everything's kind of been keeping the same right there. Rates are in the, mid to high twos, sometimes trickling into the low threes, depending on various factors, which obviously Michael can always answer those questions to figure out why is my interest rate X when my friend's is Y. But
Yep.
on the refinance front, though, that is a very huge thing for us because there has been an absolute boom over the last 6 to 7 months for a very good reason. With interest rates as low as they are, take advantage of that opportunity and save yourself the extra $50, $100, $200, $1,000 a month potentially, depending on what kind of rate you got locked in at the last time. But with that being said, though, please understand that when that happens, you refinance your house, you are now hitting the reset button on your loan. So before you do anything, make sure you talk to a lending professional to get clarity on those types of things. All right.
Yeah, absolutely. Right. So, please talk to them. This is a great time to take advantage and go ahead and save yourself some money.
Absolutely, guys. So that being said, we're kind of wrapping up for this kind of short presentation on Monday. Hope everybody has a fantastic rest of the week. Please drop your comments down below for the topics that you want us to present on next time. Because remember, we always make these videos based on what you request from us. And if this is your first time watching us, give us a like and share this with some people who you believe would benefit from this information. And always remember that when you are also thinking about buying, selling, or investing in the real estate industries, and you're looking for some questions just to be answered, or I really don't even know where to start or how to do those types of things, please reach out to us because we would love to talk with you guys and give you just that little bit of extra education to equip yourselves with the right tools so that when you're out there working with whomever it is that you're working with, you have the knowledge to make yourself feel comfortable throughout the process because sometimes it's pretty overwhelming sometimes. So, Michael, what do you have to say on those last couple of pieces of advice out there?
Well, I mean, I agree with you, Stephen. I mean, this is a great time to look and see where your mortgage rate at. If you're anywhere in the fours or even the high threes, it's a great time to reach out to your local lender or call myself
and see what's available to you. And the sooner that you do this, the better, because right now in our industry, Stephen, it's crazy, crazy busy. Everybody is inundated because lots of people are taking advantage of this. And sometimes they're locking in rates. Right now, I'm doing 45 and 60-day rates. So that's about the time frame it's taking. So if you really think about that, I mean, that's going to be December 1st is right around the corner, and we got to make sure that we close you prior to that to not pass on that new loan level pricing adjustment of 0.5%.
Absolutely. Guys, with all the information taken out right there, just kind of digest all the information that we've been telling you today. And please reach out to us anytime that you have questions. All right. But, with that being said, everybody have a great week and we will see you next time.
Thanks, everyone. Have a great one.